You're seeing gold now is, $150 away from $4,000 an ounce. I mean, that is a very significant move that we've seen in the price of gold in a short period of time. And silver, yeah, it's back above $47, very close to its double top at 50. But I think that silver is going to go a lot higher than 50. But I think the move in gold is a lot more significant because I think it really indicates a complete loss of confidence in the United States, in its fiscal policy, in its monetary policy, in the independence of the Fed. I think major central banks around the world are moving out of dollars, and they're replacing their dollars and their U.S. Treasuries with gold. I mean, it's clear that that's what's happening. And I think now Wall Street is starting to lose confidence in the U.S. government. I saw just a week ago, it was Morgan Stanley that tweaked their 60-40 portfolio, which was 60% stocks and 40% bonds. And that's, the allocation, for the last 40, 50 years since, I've been doing this, 40 years. And now they said, well, let's make it 60% stocks, 20% bonds, and 20% gold, because they recognize that there's a big inflation risk. And so they're putting out a sell signal on bonds, saying sell half your bonds and put the money into gold. I've never seen Wall Street do that, any major firm, the entire time I've been in this industry. I've been kind of like a lone wolf out there telling people to own gold. Now you've got, major wirehouses saying it. And I think this is just the beginning. I don't think Morgan Stanley is going to be the only firm that's going to be recommending that clients allocate part of their portfolio to gold and then gold-related equities. I think that's why gold stocks are, more than double so far this year. They're outperforming the tech sector. Best performing stocks in the U.S. market are gold and silver stocks. And so this is, I think, the beginning of a big trend, but it should be very problematic for the U.S. because America depends on the world wanting to hold dollars and wanting to invest those dollars in treasuries and mortgage-backed securities. And if the world is going to be exiting dollars and selling those instruments and holding gold instead, that's a huge problem because it means much higher consumer prices for Americans. It means much higher interest rates for Americans, and it means a much lower standard of living for Americans. Well, to the extent that central banks hold gold, I don't think they're going to hold tokenized gold. They're going to hold actual gold that they have in their vaults. But I do think that tokenization could be helpful as far as enabling individuals and institutions to more easily transact with each other in gold. If I have a gold token that can move along, a blockchain, then it's very easy for me to transfer ownership of my gold. I don't have to ship you the gold. I could just let the gold sit in a vault somewhere, and I could just send you the token that represents ownership of that gold. And that's much more efficient than, let's say, me sending you Bitcoin. I can do it faster. I can do it cheaper. But I'm sending you ownership of actual gold, not just, a participation in a digital Ponzi scheme. So you have real value that underlies the token that makes it a store of value, something that, Bitcoin or other tokens can't be because they don't have any value that anybody can store. But you can also use the tokenized gold as a medium of exchange, as a unit of account. So I think there's going to be a place for that in the future. It may be one of the few use cases that actually, comes out of crypto. Ironically, just about every other use case is all a bunch of BS. I don't know. I mean, they're usually the last to get the memo, but I think at some point they will. I think you're seeing institutions now, they're, moving money in. I think eventually they'll, spread the word to their sales forces to, give the recommendations to the retail brokerage client. But I think that's coming probably next year. You'll, if you have an account at, one of these firms, I'm sure next year you might get a call from your stockbroker with a pitch on a gold stock. Yeah. Something that probably, you've never heard before. But that's coming. That's coming. Bitcoin, has maybe topped out here. It hasn't been able to go up at all. And in fact, it's in a bear market priced in gold. It's fallen by more than 20% in a month relative to gold, right? Bitcoin's gone down and gold's gone up. And in fact, if you look at where gold was at its peak in 2021, 4 years ago, late 2021, Bitcoin was worth more than it is today in terms of gold by about maybe 18%. So that's a pretty significant decline in the real value of Bitcoin measured against gold, because Bitcoin is marketed as a digital version of gold. So I think if you want to see how Bitcoin is doing, it's best to measure it against gold versus measuring it against the dollar, right? Or any other fiat currency, because it's supposedly not a fiat currency. It's being marketed as a digital alternative to gold. So gold is probably the best way to measure it. And it's down, considerably over 4 years. And that is despite all the massive hype that it's received from the introduction of all of these Bitcoin ETFs, the creation of all these Bitcoin treasury companies led by massive, leveraged buying by Michael Saylor for strategy, the election of Donald Trump and an entire crypto-friendly cabinet with a strategic Bitcoin reserve. I mean, so Bitcoin has gotten the benefit of all of this, marketing, push, and yet it's losing value against gold, which hasn't really gotten any marketing at all. Hey, from, the Trump administration is not out there getting people to buy gold. I mean, he wants people to buy the gold card, but he's not selling actual gold. His sons are in the crypto business. They're not in the gold business. Yet despite that, gold's doing better. And I think we're going to see Bitcoin really, really take a hit here when I think a lot of the, Johnny-come-lately speculators, not the true diehard believers that'll, go to their grave with their Bitcoin, but people that just bought Bitcoin ETFs because they thought they could make a quick buck and they believe the hype. I mean, these are the same guys that are buying, meme stocks and stuff like that. They're just jumping on whatever's hot, trying to make a buck. I think when they throw in the towel, you're going to see a real collapse in the price of Bitcoin. Yeah, I don't know that the central banks are going to get into silver. It's pretty bulky, but I think the retail public will. I mean, they say silver is the poor man's gold. And this whole rally has really been powered by central banks. But when it broadens and you do have more of a retail component, like, I have a gold company, Schiff Gold, and our sales have been pretty lackluster over the last couple of years, despite this record rise in the price of gold. And normally you would see this kind of increase in the price of gold generate a lot of interest among retail investors, but it hasn't happened yet. They've been too distracted with tech stocks or cryptocurrencies, and they haven't, reacted at all. But I think that's coming. I don't know whether it's $4,000 gold, $5,000 gold. Something is going to trigger it. And of course, maybe silver getting above 50, maybe $60, $70 silver, because silver does have a long way to go up. I mean, I could see $100, $200 silver or more in the next 3 to 5 years, and silver's not quite 50. So, there's a lot of upside left for silver. And I think at some point, the retail public is going to start buying silver, and hopefully they'll buy it from Schiff Gold. Right? We got great prices on gold and silver at schiffgold.com. Well, I think the dollar is in the process of losing that status now. That's what we're witnessing. And it's a consequence of the policies that we've pursued. I mean, particularly the Joe Biden sanctions against Russia. That really highlighted the risk to other countries of holding dollars as their primary reserve, because it could be yanked out from under them at the whim of an American president. So that was, a warning cry. But also when you have Donald Trump demanding the Fed cut interest rates, slash interest rates, ignore inflation, print more money, when he starts stacking the Fed with his cronies, when he starts coming up with reasons to fire board members so he can replace them with his own people, it really calls into question, the integrity of the dollar system and the independence of the Fed. The passage of the big, beautiful bill, I think, was a major problem because it really shows that no matter who's in the White House and no matter what they promise on the campaign trail, there is going to be no fiscal responsibility. No spending is going to be cut. The deficits are going to keep rising as far as the eye can see. And so there's a complete loss of confidence now in the fiscal integrity of the United States to ever legitimately get its house in order to the point where it can repay its obligations without creating massive inflation. And therefore, if you know that the only way you're going to get repaid by owning treasuries is with debased currency, then why hold them? And that's why people are selling now. The central banks are selling their dollars and their treasuries and getting into gold. And that's why you're seeing the yields where they are. They're not coming down. I mean, they're not high yet. I think they're going to get very high. But right now, they're in the 4s, but they're not in the 3s or lower, which is where, the government would like them to be, but they're not going to get down there because there's no demand. And I think that the demand is going to weaken over the next several months, and yields are going to rise, even if the Fed cuts rates a couple more times.